Yes, sir. Live.
Good evening, members. Welcome you all for the today's study circle on audit planning for effective audit. To handle this session, we have with us JK Sharath. Welcome you, sir. When we discussing to have a series of programs on standards and auditing, we thought planning also is very important. We started with going forward, we planning to have session on sampling, documentation, engagement letter, and materiality, and so on. Because some of the standards, small and medium firms will not implement, they will not take it as seriously. Just conventional audits will start doing it. Instead of that, follow these standards, implement in our regular audit. It will make a lot of difference so that we can give a quality service to our client also. And considering the discrepancies happening, lot of restrictions and notices are receiving from ROC, so many places, it is better to adapt standards and auditing in our day-to-day audit with methodically, and learning and implementing is very, very important. To teach this, to enlighten us on this topic, we have with us JK Sharath from BDO, very senior member, and is the right person to handle this session. Once again, I welcome you all for this program. Before handing over the session to him, I just want to bring a important announcement to all the members about the programs what you plan for January. As I repeatedly telling that we are conducting online yoga classes. It was successfully happened in December. We are continuing in this month also. Lot of members are joining online and making benefit of this yoga classes. If not nothing, at least it will help members to get up at 6 o'clock and start doing some of the activities. Then they can make better in their life. It will be helpful for their upkeep their health. Request member to register for this program. Next 11th, we have a program on taxation of HUF, trust and family settlement by our beloved past president Sunil Talati sir. I request members to join. As usual, budget program we are planning to have on 3rd February. This time we want to have it in a unique place. I'll let you know. And 11th February we have a class by class discussion. And 18th January this month we have one more important program, budget words and phrases demystified by KS Ravi. It's also a very important program. And so many other interesting programs awaited for this month. I request members to join and support all this, conduct all this program. With this, once again, I welcome you all for this program. Now I request our treasurer Manjunath Hallu to give an introduction of today's speaker JK Sharath. Thank you. Over to Manjunath.
Thank you, sir. Good evening, members. Welcome to today's session on audit planning for effective audit by CA JK Sharath. JK Sharath is a partner in MSKA and Associates, a member firm of BDO International. Sharath is a partner at affiliate of BDO, MSKA and Associates. He has more than 2 decades of professional experience in audits, reviews, internal controls, reporting under IFRS, US GAAP, and capital markets. He has experience of working with domestic and multinational companies in various sectors and with companies having operations in multiple jurisdictions. His experience spans across industries, including manufacturing, technology, consumer goods, life sciences, etc. He specializes in multiple GAAP reporting like Indian GAAP, Ind AS, IFRS, US GAAP, and has experience in GAAP conversion also. He has extensive experience in capital market transactions like IPO, QIP, etc. He has led implementation and monitoring of internal financial controls, Sarbanes-Oxley in various organizations. Sharath is a regular speaker on technical topics at various forums. He has conducted moderation sessions with various eminent panelists. He is a fitness enthusiast and likes running, trekking, and traveling. His educational and professional qualifications: he is a member of Institute of Chartered Accountants of India. He is also a member of Institute of Cost Accountants, and he is a Bachelor of Commerce. As the saying goes, if you are failing to plan, then you are planning to fail. Let's hear from the expert. With this brief introduction, I present before you CA JK Sharath. Over to you, sir. Thank you.
Thank you. Thank you. First of all, I would want to thank the Institute and the Chairman Secretary for giving me this opportunity. With this planning session, I'm hopeful that I'll be sort of able to enlighten the members on how important planning is, especially for the auditing fraternity, considering the current circumstances in which the regulatory oversight has increased on the overall audit fraternity. It is very essential that an effective audit is carried out, and an effective audit can be only done by doing an effective audit planning. So let me share my presentation. So planning is something which is not just important for audit, it is also important for any activity you do, right? Like Chairman sir just now mentioned that you plan your day by doing yoga in the morning, get up at 6 o'clock, which will help you enabling have a proper focus on your health and also focus on your own upliftment. Similarly, planning is very, very important even in an audit. So briefly, I will take you through what are the standards or the technical guidelines which are available, the standards on auditing which is there. And then subsequently, I'll also give you some of the practical insights on how each of them needs to be dealt with and how the documentation has to actually happen in each of the audit files. So if you see what are the guidelines which are available for us on audit planning, one, we have SA 300, which is planning an audit for audit of financial statements, which is the primary guidance on how you need to plan for audit of a financial statements. And then in addition to this, the institute has also issued an implementation guidance on SA 300 on how a planning has to be implemented. Members should note that this implementation guidance is really in very detailed manner. The guidance has been given on how each of the aspects of the planning needs to be taken care. In fact, if you look at it, audit planning would essentially involve planning for the whole audit. So it's from the beginning to the full end is what you will plan. And essentially what would happen is, as part of this, you would not just cover this standards on auditing, but you would look at each and every other auditing standard which would say how an audit needs to be done. So while it seems like there is only one standard on planning, it is really like the mother standard, where you will have the standard like SA 300 would say that you would do these aspects as given in other standards. So that way it's like a very broad guideline which would lead you to other standards on auditing on each of the aspects. Like let us say if you are determining materiality, you will say you do materiality based on this, or if you are doing some pre-planning activities like engagement acceptance, it says you would do based on that standard, follow those standard guidelines. So that is how it works. So what is the scope of the SA 300? So primarily SA 300 in its scope says planning an audit of financial statements with the auditor responsibility to plan an audit of the financial statement. So the whole idea is to make sure we plan for the financial statement audit. And the objective is to plan in such a manner that the auditor performs his audit in an effective manner. So now what is here important is an effective manner, right? What is an effective audit? So an audit can become effective only when it is planned properly and it's executed properly. Now, does that mean that I will only plan the audit at the beginning or in the starting of the engagement and then I will do an execution? The answer is definitely no. So the audit planning is a continuous process. While majority of the planning you may start and do when you probably start the engagement or even before starting the engagement, the actual planning activity starts even before you sort of commence your audit. Like let us say you start with your acceptance formalities, right? So even that is part of your planning. You plan to see whether you would want to continue with the client. You will carry out certain procedures to assess whether you will want to you will assess whether you meet the ethical requirements, whether you meet the independence requirements. So you see whether you can continue to serve the client if there are any conflicts which are there. And then from then on till you sign off and the opinion is issued and the files are done, the planning activity goes on. So overall, if you see, there are three primary buckets, which I would call it, under which the whole planning activities can be categorized. The first one is the engagement activities, or the or what is called as preliminary engagement activities. And then you will have the overall audit strategy, which will be part of your planning. And then you have the audit planning. So I'll explain each of these in a detailed manner in my coming slides. So what are the activities which are part of your preliminary engagement activities? So primarily, if you look at the preliminary engagement activities, you have three major categories of activities which fall under preliminary engagement activities. The first one is performing acceptance and continuation procedures. So primarily, you would look at whether how you will accept the client and how you will continue with the client. There are procedures which are defined, which would say you will do like you will check the integrity of the principal owners, scheme managerial personnel, then those charged with governance, and you would see whether how those outcome of those results would impact your client acceptance and client continuation, and also you would assess how those would impact on your overall risk assessment and reliance on the management's various representation or various details which they will be providing. Then the next process would involve evaluating compliance with ethical requirements, including independence. So in this case, you will sort of look at what are the various ethical requirements which are there. Now ICI Code of Conduct lays down various fundamental principles for ethics, like integrity, objectivity, professional conduct and due care, confidentiality, professional behavior, which a member needs to adhere. So just to give little more details, integrity is like the professional needs to be honest and need to always act in an impartial manner and display the professional qualities. Objectivity is not being biased and being conflict free. Professional competency and due care is where you maintain the required professional knowledge and the skills that are required for you to sort of discharge your professional duties, and taking necessary care and due diligence when you are performing your professional services. Confidentiality, very, very important. Respect the confidentiality of the information which you have. There are various laws which today also apply to auditors, especially if you are dealing with listed entities or SEBI entities. So you will have to sort of give a declaration that you have processes and systems in place to make sure you are adhering to the confidentiality and price sensitive informations are not being sort of um, given out or leaked out. And of course the professional behavior, you will have to always demonstrate a professional behavior. Now going to the independence part, you as part of your independence, the independence potentially gets impacted through multiple threats. uh, Five of them primarily. First one is the self interest threat, which is like where if you have some, if the auditor has some interest in the auditee, then you will have a self interest threat where it will impair your objectivity. Let us say you are auditing a company and you are also having some business relationship with them, like you're supplying or you're taking some material, then you will have self-interest threat. Similarly, self-review threat, where you end up doing on the both sides of the table, right? Like you carry out an activity which impacts your auditing in the sense that you also sort of do a management role and at the same time do an auditor role. So wherein you have a self-review of whatever activities you have done. Then advocacy threat, where sort of the auditor promotes is in a position that you overall propagate the client so that your overall objectivity is compromised. Similarly, familiarity threat. This is one of the key aspects where the auditor and auditee become too sympathetic and you have interests in each other, which will lead to primarily maybe due to long-standing relationship, etc., wherein you have too much familiar, so you take your client for granted to say anyway he would have done everything properly types. The other one is an intimidation threat, where there are some coercion or some other sort of activities which push you to sort of not think in an objective manner. So these are some of the things which an auditor needs to evaluate before sort of deciding on accepting or continuation procedure. And the key here is to document all these as part of your uh, audit file or audit planning memorandum, wherein each of these assessments and evaluation, including the acceptance procedures, whatever pre-acceptance procedures are sort of documented, and whatever procedures are carried out are documented in form of a memo and are stored part of the work paper file. And of course, the last one is establishing and understanding the terms of engagement. We have a separate standard SA 210 on this. So you will follow those and then have your engagement letter done as required as per the guidelines given under SA 210. Yeah, I think this is what I broadly covered under the performing acceptance continuation procedure. You look at the integrity of the owners, and then you will check whether I think another important point is also to see whether the engagement team is competent to perform the audit engagement and has the necessary capabilities. So this is more to say whether whether the auditor has the necessary capabilities to do it. This could be anywhere from an industry requirement to a geographical requirement to the knowledge of the framework under which the reporting has to happen, because an audit of financial statements can go from anywhere to anywhere, right? It can be a general purpose financial statement to a special purpose financial statements to an agreed upon procedures, and it can be under any framework, to say under Indian GAAP, Ind AS, US GAAP, IFRS, or any GAAP, whichever is required by the auditee. Then other key point which you need to also factor when you decide on the acceptance is the significant matters which has arisen based on your own experience of auditing the client in the earlier period. So based on your assessments of what were the issues in the previous audit, you can also decide whether you would want to continue or you would want to not continue, and the reasons for that. This could be anything like any deficiencies or any other matters which has come to the attention of the auditor at that point of time, based on which this decision can be sort of taken. So this next one, which I had talked of, the next bucket is basically the audit strategy and the audit plan after the preliminary procedures. One of the key confusion, or one of the key things which happen, is both strategy and plan are generally used interchangeably by the people. While both these are not same, there could be certain overlap between what a strategy and a plan is, but definitely strategy is much different from the plan. Strategy is basically a more broader and a very high level kind of a document, which would normally cover the why element, the why of any thing which has to be done, which will say, and it is more like a blueprint of what goal you would want to achieve. So it's a very high level document which will say why I'm doing anything and how I will get to the desired outcome. So there is not much of a granularity when you go look at strategy, whereas plan on the other hand, it entitles a more granular steps which you will be taking to accomplish or address the manner in which you will achieve your overall strategy. So basically, plan would address who, how, and when aspect of the overall task, whereas strategy would be more of why and things like that. So it is very important that the auditor, when he's documenting his planning, or when he's carrying out his planning, he establishes an overall strategy that sets the nature, timing, and extent of the audit which will be done, and this strategy is the blueprint which will guide in developing a overall audit plan. So if you look at it, strategy is a more higher level document, and then below that maybe you will have a plan coming out of those strategy. Based on the strategy, a more detailed this one of how you will sort of execute it or how you will achieve those tasks. So all in all, while these sound similar, they are not the same, both are different. Now we'll look at what are the key consideration which needs to be looked at when an auditor is developing an overall audit strategy. So primarily there are these five considerations. First one is to identify the characteristics of the engagement that define this one. So, and the second one is ascertain the reporting objective of the engagement to plan the nature, timing of the audit, and the communications which is required to be carried out by the auditor. And the third one is consider the factors that in auditors' professional judgment are significant in directing the effort. So primarily here he will have to look at what are the key areas where the auditor in his judgment will focus on and will carry out the work. And then the next one is considering the results of the preliminary engagement activities. So wherein the auditor would have carried out certain preliminary activities in the form of variance analysis or ratios and other analysis, which will give him an insight on where he needs to sort of focus on carrying out his audit efforts. And of course, the last one is where you will assess and ascertain the nature, timing, and extent of resources which are necessary to perform the engagement. So I'll go to each of these in details and then sort of take you all through the detailed one. The first one is the characteristic of the engagement that define its scope. The first key consideration which you will need to look at when you're looking at the characteristic of the engagement is the financial reporting framework. So this becomes very important because you will need to understand which framework you are reporting under. So it could be either an India's financial statements or an Indian GAAP financial statement or a US GAAP or an IFRS. So this is very key because based on this, you will also determine what procedure you will need to carry out and what standards you will apply for them. So this is the first thing which you will need to assess and see which framework you are sort of working on, under which you will be giving your opinion on. And the next one is on the need for the statutory audit. So here there are multiple aspects. So wherever you are doing a statutory audit and it is required mandatory by the act, then you will have to see whether you are giving an opinion on the standalone financial statement, or this is covering the consolidated financial statements, or is it covering some branch audit which you are doing. Further, here you will also need to see if client is going in for some special purpose reporting. You will have to find out why the special purpose reporting is done and what is the overall objective of taking a special purpose financial statements. Similarly, if the auditor says I need a review to be done, then you will also need to see and apply the review framework which will come. The next key consideration is the expected audit coverage. So primarily here you will note that the client may have multiple locations, the client may have multiple branches, or they may also have subsidiaries across various locations. So based on your professional judgments, you will sort of estimate and see which are the ones you will need to cover. Essentially, here you will generally see that based on materiality and the importance and the significant, plus the risks which are associated in each of those locations or components, you will see what all needs to be covered. And auditor can obviously consider the rotation policy here, wherein he will, based on what was covered in the previous year or earlier years, follow a rotation policy, and then have a comprehensive document which will say how he is comfortable by covering certain areas and how rotation policies are applicable. Very important here that the members create a proper document, especially if the client has multiple geographies and this is applicable, on why they chose to sort of cover certain areas or cover certain geographies and not cover certain geographies. So it is important that that professional judgment which was applied is sort of documented in the form of a memo or a document, and is retained as part of the planning document and the planning work papers. And the next one is on the timing of the audit work. So depending on the requirements of the client and those charged with governance, you will have to decide on when the audit work needs to be commenced, on when it has to be done. So again, it goes back to the interplay with the framework. Let us say you have a listed entity, then you will have a requirement to do a quarterly review and then a year-end work. And the timelines are prescribed by SEBI LODR regulations. So it's important that that alignment happens. So it is essential that the auditor has a discussion with the management and those charged with governance upfront, to understand their expectation and see what is the timing for each of these they are looking at, and then accordingly plan for the work. Then another important aspect is what are your reporting requirements. So some in various cases a company may have a specific industry specific requirement. Like if you see banking, banking regulations, there may be a separate requirement under the Banking Regulation Act for an auditor to report in addition to his normal reporting under the Companies Act. Further, here I think it is also important that internal control reporting may apply to some companies and they may be exempt from some companies. Similarly, CARO may apply, CARO may be exempt. So it is important that when an auditor is developing an overall audit strategy, he sort of understands what are the requirements, what are the reporting requirements which could apply and which will not apply, and plan the nature, timing, and audit procedures accordingly based on what is applicable. Then understanding the reporting currencies. So this is again essential, because if a company is present in multiple geography and they are dealing with multiple currencies, then there will be a separate sort of translation requirement which will come, and a separate audit accounting standard applies to this. So you will need to sort of look at, and if there is a consolidation element as well as part of dealing with multiple currencies, you will also need to see how those are complied with and how those are sort of taken care of. So, and there may be some audit risk associated with those account balances, and the auditor may need to sort of look at those risks, or probably the controls which could exist in the translation and reporting under foreign currency. So even assessment like the functional currency, the reporting currency will also come as part of this multiple currencies reporting. So even those needs to be factored in when the auditor develops an overall audit strategy for his planning. In case the auditor is deciding to rely on the work of an internal auditor to the extent permitted under the standards, then again here he needs to factor what he is going to rely, what he is going to do, and what areas he is going to rely, and what areas he is going to test on his own, and clearly bring out the professional judgment and the justification for carrying out those reliances. Plus there is the standard which will also say the auditor needs to assess these like the competency, etc., in that standard. So that also is essential for the auditor to assess and document upfront as part of the overall strategy, which will give a basis for them to sort of rely on a work of any other experts. One of the key important aspects is also the service organization. Many of your clients, you may note that some of the services generally the payroll services or managing some of the activities of the finance function might have been outsourced to a separate service organization. So in under these circumstances, it is important for auditor to understand and then develop an overall strategy on how he will sort of test those controls or test those evidences which will come from those service organization. So there are multiple scenarios, especially when a service organization is involved. While there is a separate auditing standard covering it, at a very high level, if there is a control which is being performed by these service organizations, then and if the auditor is required to test those controls, then you will have to test it. So there could be a scenario where these service organizations are already subjected to audit by some specialist, and you will get a SOC kind of a report from them, which you would assess and then rely on those SOC report. If those kind of a SOC reports are not available from the service organization, then the auditor will need to sort of go and test those controls to the extent it's applicable to your clients. So accordingly, you will need to plan for those in your overall audit strategy on how you will go there and how you will be testing those controls. And the next most important point is the effect of information technology. So here you will see that as part of clients' overall accounting system or any other application which they are using, there may be various systems and processes which may be done through use of information technology or done through some ERP. So the auditor will need to assess and plan to see how he will sort of use a specialist or use people to test those systems, test those applications, ERPs, and then sort of get a comfort on that. In addition, the auditor also need to plan what are the various IT tools or processes which he will use sort of to get a comfort on the data which is coming from the ERP. Like let us say there may be a ERP and there may be a large volume of data which may come from an IT system. The amount of comfort which an auditor would get by just doing some sample of some numbers, let us say if there is lakhs of transactions during the year for a particular account balances, it is very difficult to get a reasonable comfort by just testing few samples and finding no exceptions. So the auditor will need to sort of use some computer aided techniques, CAD techniques, to sort of get a much higher level of assurance in these circumstances. So planning for those use of those tools or technology, and how and what when or it will be used, should be part of the overall audit strategy which is there. And then the most important thing which is to be done is the availability of the client personnel. This goes back hand in hand to the requirement of the framework, which will say by when an audit needs to be completed, and also the management and those charged of with governance, their overall requirement of what timelines they are looking and when they are looking. So accordingly, you will plan for an overall audit schedule wherein you will make sure the respective client personnels are available, including various locations, right? If the company has various locations, various branches or factories, you may need to visit those, and those personnel must need to be available when the auditor is or the team is visiting there. So those also need to be planned. So the timing and the extent of coverage of all those needs to be sort of planned. And it should be part of your overall audit strategy. So these are the broad considerations in the first category, where you will define the scope of the engagement uh, as part of your audit strategy. We'll go to the next one, the objective of the reporting objective to plan timing of the audit and nature of communication required. Under this, the first thing which will come is the entity's timetable for reporting. So each entity, based on what they are, will have multiple sort of reporting requirements. Based on that, the auditor will need to plan the timing of the overall execution and audit delivery. So in these cases, we may also have a situation where an auditor may choose to do an interim audit, wherein he will carry out certain procedures at an interim date, and then he will also do some top-up procedures for the broken period and the final stages of the audit. So if these kind of things are being planned, then he will have to sort of include what are being covered as part of interim audit, and how the balance period will be covered, and what procedures he'll do in each of these period, and what timing he will be done. So those will all form part of the audit strategy. One of the critical requirements is having meeting with those charged with governance and the management. This is a mandatory requirement under the auditing standard, that an auditor has periodic meetings with the management and TCWG. So usually the auditor needs to engage with them and discuss various things, including audit strategy, as well as the nature, timing of the overall deliverable, and also understand from them their expectation of the timing and what deliverables they are looking at. So this can be either I think one of the key challenge we face here is how do we evidence and how do we document this? Because generally you would go and you would meet them, you will have a discussion over a cup of a coffee, or you generally have a normal meeting with by attending any of the their meetings. So I think one of the key ways in which this can be documented is by making minutes of the meeting, or an agenda for the meeting. So you will have an agenda prepared which will say that these are the points which we have to be discussed with the management or TCWG, and then these were the minutes of discussion, and circulating that minutes back to the client, and keeping that email or any other communication which is provided as part of your overall audit strategy and audit planning documents. So this is a very important requirement, and this is how this can be sort of documented in the audit plan memorandum. Then the other key point is, in case if you have a component auditor, the auditor are required to carry out certain procedures under SA 600. So as part of this, you may need to communicate with the component auditors depending on how significant they are. Plus also you may need to sort of decide if there are multiple components. You may want to decide based on your professional judgment which are the components you would want to cover and which are the components you may not want to cover or scope out for various reasons. So here again, documenting the judgment of what was covered and why was some components not covered is very important. And here you will also need to, in your audit strategy, have a clear documentation of who are the components who you are going to cover and what are the kind of communication you are going to have and what is the reporting requirement you expect from them and what are the timings, and also your plan to sort of having a discussion with them and assessing the risks, etc. Those all should be part of your overall audit strategy and audit plan. Then we go to the next key consideration, which is significant factors in directing the engagement team's effort. I think once you have a clarity on the scope and you have clarity on the nature, timing of the communication required and the expectations of the management and those charged with governance, you looking at what are the factors in directing the engagement team's effort. I think the first and the foremost aspect is you will determine the materiality. Here again, based on what kind of reporting you have, whether you're doing a standalone reporting, console reporting, or you have components, you will determine the various materiality which will be applicable for each of those scenarios. And then determine the nature, timing, and extent of audit procedure to be carried out on each of them. Materiality, I think, will be key element because wherever you have a professional judgment which has to be applied, materiality will be one of the key consideration in determining whether you want to scope in something or scope out something. Because whatever is not material, and if you don't see any other quality risks which are there in those areas or those account balances, can be scoped out. So the other key element of directing an engagement team is having a professional skeptical mind. So this is very, very important as part of your audit strategy. It is important that the team which is identified has a skeptical mind, and they always I mean, the auditors need for having a professional skeptical mind. Heightened professional skepticism is never undermined. It is the most essential thing which has to be done. So it is essential that as part of audit strategy, the engagement partners drive this to the whole team to say that the team, it is important for them to have a skeptical mind and not take anything just like that, right? I mean, what is skepticism is basically having a questioning mind. You sort of question whatever has come and ask the appropriate question and ask for appropriate evidences to make sure the documents given are substantiating whatever is being looked for. Then the direction, another factor which will determine is the volume of transactions and the nature of transactions which are there. So this will clearly determine to what extent you will sort of perform your procedures. So wherever there are high volume transactions, you will obviously see that you may need to plan to use for some kind of a computer-aided tools to sort of carry out your procedures, primarily to get that comfort. Otherwise, just checking few samples in lakhs of transactions will not give you the necessary comfort which could be there. Similarly, the nature of transactions, depending on the account balances and the nature of transactions, if a transaction involves high judgment, or if the auditor has identified a higher risk for those balances, then he may want to do an higher testing of those samples, or additional incremental testing for those account balances. So based on the risks and the nature of transactions and the volume, the kind of work which the auditor needs to do will sort of change, and it will increase or decrease accordingly. Then the other one is the overall control environment. This is very important, that if the auditor assess whether the management has an aptitude of deploying a sound control framework, how susceptible the client is to implementing a robust system of internal control or a robust framework of financial reporting, is very, very important, because this will sort of enable the auditor in deciding how reliable the information flow from the client is. So if there are challenges in the management aptitude for the controls, then obviously the amount of reliance you can place on the information which comes goes down. Similarly, if the client has a robust internal control framework, and they have a sort of a commitment to overall, implementing and maintaining a sound control environment, then you will see that the information which is provided is much more reliable, and this will again determine your extent of work which has to be done. So primarily, if there is a good control environment, you will be able to rely on those controls, and those controls will sort of be effective, and accordingly the extent of substantive procedure you will carry out will be not very high. Then the other key factor which will affect overall your audit engagement team efforts is any transaction, right? If let us say the client has undergone some merger or demerger or any kind of acquisition or kind of a transaction, then obviously the overall effort would change. So these are all more like a key significant developments which would have happened. So you need to factor those in your overall strategy to see how you will focus your nature, timing and effort, right, of the whole audit team in carrying out the audit of these transactions. Similarly, we may also have some business developments, like something like the company might have some regulatory issue or something else coming up which can impact their overall business, or loss of key customers, or some challenges, like we have this Ukraine Russia issue which is happening, or the China issue which is happening, which could probably impact the overall business of the company, which could have an in-turn effect on the financial statements and the reporting, like receivables or payables or inventory in any of these geography may have a challenge because of all these framework, right? Or the COVID which we had. So this will all be a key sort of consideration when you look at it, when you develop your overall audit strategy. And the next thing which will also impact your overall audit strategy would be the changes in the financial reporting framework. So let us say a company is carrying on their overall reporting under the Indian GAAP, and once they meet the criteria, they now have to sort of report on Ind AS. So the overall framework under which it is being reported changes. So then accordingly, because of this, there may be certain incremental effort or work which may be involved in testing this conversion and the testing of the new framework. So the auditor will need to factor these when he's developing an overall audit strategy, to see that what framework was being used earlier and whether there is any change in the overall regulatory framework. This is more a reporting framework, but there can also be a business kind of a change, like government may come up with some regulation or something which can start applying to them, like to give you an example, NBFC or bank, right? There may be some regulation which government may bring in, which will require significant change in the overall legal environment under which the client operate, and that could lead to some additional disclosure or additional requirement or additional compliances, which can have a bearing on the overall financial statement, and accordingly the same thing will also have a bearing on your overall audit strategy which is being developed. So let's go to the next key consideration. The other two are the preliminary engagement activities and the knowledge gain on other engagements. I think I spoke on this briefly in the beginning, where I said that based on whatever were the results of the previous audits which were carried out by the auditor, the insights which are gained through those needs to be factored. Let us say he had noted some deficiencies or misstatements as part of his earlier audit. The auditor will need to factor those learnings and see how he will consider those when he's planning for his audit in the current year. Now going to the nature, timing and extent, I think one of the key aspect is selecting the engagement team and then the engagement budgeting. It's very, very important that an appropriate engagement team is selected in carrying out the audit. What is appropriate would depend on the circumstances, depending on the risks, the nature of the client, and the kind of control environment in which the clients operate. You may need to sort of deploy appropriate resources who bring in the necessary skill and the competencies. Like, let us say the skill could be or competency could be an industry specific competency, or could be even in terms of framework specific competency. Like if you have an Ind AS reporting, you will need to deploy resources who have necessary skill of working on Ind AS. Similarly, if there is an internal control reporting, then you will have to see that the person who is deployed have the necessary competencies to sort of work and test those internal controls and come out with appropriate conclusion. Going back to the industry specialization, some industries, like if you have financial services, bank or NBFC, you need to you need to deploy resources who have experiences in those industries. So it is very, very important. In addition, you will also see that the kind of resources you will need to deploy will also depend on the risks which are there, and the amount of risks which are identified at various account balances. So if there are key judgments, which are multiple key judgments which are involved in various account balances, then you may need to sort of deploy a more senior resource who can sort of check those key judgments and assumptions which are considered by the management when they are deriving at the overall financial statements. Similarly, when you plan for the timing of the audit, you also overall look at what is your budget, and auditor plan to allocate budget. So in terms of budgeting, I think you will need to do an area-wise budgeting and category-wise budgeting. And then it is always essential that higher efforts are directed towards key areas or areas where the auditor has identified risks, higher risks, and also based on the various judgments which are there as part of the financial statements. It is important that a senior member resources are deployed who bring in those necessary skills to sort of test them and check them. This has to be factored in an overall engagement budgeting itself. So this is on the overall audit strategy. Okay, so here I think in this slide I have sort of illustrated what could be the content of the audit strategy memo. So what happens, whatever I have sort of mentioned till now, which will be part of the audit strategy, needs to be documented in one place which is called audit strategy memo, and this has to be part of the planning documents and the work paper. Now, here I have summarized whatever we have discussed so far, what all should be there. I think typically you will have the members should make a format of audit strategy memo, which is like a more skeleton, which will contain all the broader areas. While those are not cyclostand and not fixed as such, but at least it will act as a cursor or a guiding factor wherein each of these will be addressed and not missed out. Most of the cases, all these would be bare minimum applicable. In addition, you may also have other things which will come in depending on the various circumstances and kind of engagements we are being done. So like here, if you see this is the flow. Like you will first have the objective of the overall audit. What is the objective of the audit? Basically to express an opinion and all that. And then under Indian GAAP or whatever framework, then you will have your auditor responsibility. As part of your memo, you will say what all you will do as an auditor, what you will say and what it will done. And then you will have the overall audit approach, what approach you are doing to sort of carry out this audit. And the next key item which you will document is your discussions with the management and those charged with the governance. When were your key discussions which were made, and what happened as part of discussion, and what were the outcome of those discussions. And in cases where you are sort of relying on the work of the internal auditor, or you work, and placing some reliance on them, then you will document what were those reliances and how these are done. And if let us say as part of internal audit they have noted some deficiencies in their report, and you are reporting on an internal control, then you will have to factor those deficiencies and see how does that deficiency impact your reporting on the internal control. Similarly, if you use any specialist, right? So specialists here are the specialists which auditor would use as part of his audit, overall audit planning and audit execution. This could be typically a specialist, information technology specialist, right? We spoke about a lot on IT being used, and audit procedures which needs to be carried out under IT environment. So for that, an auditor will have a specialist whom they would use, and then how he'll be involved and how he will carry out the various testing of the IT security and the IT application, and how he'll check the general IT controls is something he would have looked at. The next one is the use of service organizations. Here under this, you will basically, I think we spoke about what kind of service organization it could be. So yeah, in your strategy memo, if you are relying on some of the controls which is being carried out by the service organization, you will document here as part of your strategy memo what are those you are relying on. Or if you're getting a SOC type 2 report or type 1 report, you will say that for this you are getting this type of report, and this is what is a strategy you will follow for those service organization reports. And then of course the materiality which you will use on the overall audit planning, and what is the process in which and how you will apply this materiality under various circumstances, and how you will evaluate the misstatements, both corrected and uncorrected, which you would probably notice as part of your audit. Then the next key point which has to come as part of your audit strategy memo are the key risks which you have identified. These are basically not all the risks, but the key risks which you have seen as part of this audit based on your preliminary assessment discussions with the management. Generally, the standards on auditing requires you to have at least two mandatory key risks. One is the management override of control, and the other one is revenue recognition. In addition to this, you may also have, based on various circumstances, various other key risks. And then you will here in this strategy memo, you will document how you will what are the key risks and how you will sort of address them as part of your overall audit. You may not give a very granular level details here, because that will again get covered in your audit plan, which will be again coming after this. So this is more like a strategy document where you will say these are the key risks, and overall basis this is what we plan to do. And then of course the fraud considerations, you will have to it is a mandatory requirement for auditor to look at fraud considerations when he is carrying out the audits. As part of his risk assessment, he should also assess if any of the account balances are susceptible to fraud, and what procedures you carry out and plan to carry out as part of that assessment has to come. Then the independence audit timelines, like how we discussed initially, the auditor needs to sort of conclude how he's concluded that he's independent and he does not have any conflict as required. Then you will summarize the overall audit timeline, where you will have various activities as part of the memo, where you will say this is when you will develop the overall audit strategy, audit plan. Then you will do the field work, which could be control testing, and then you will have the interim work. Then you will have the final work, location visits, various location, which dates you are visiting, which date you are completing the this one, and what dates you will have the review by the manager, and then review by the partner, and then the quality reviewer, and when you will have a planned date of meeting with the those charged with governance and the management. So you will summarize in this overall the timelines which you have agreed with the TCWG. So, and then the next is the audit team. So here you will also summarize the identified on the audit team, which will bring in the necessary expertise as well as the necessary relevant experience. So that team you will identify, and also identify the roles for each of them. Then you will summarize the fees which you have agreed, and then terms of engagement, which is basically the engagement letter details on when the engagement letter was signed, and what are the general terms of those engagement. So on a very high level basis, these are the broad contents of your audit strategy. So the members will need to sort of make a memo which will cover bare minimum these items, and these memo needs to be reviewed by the partner. And also if there is a quality reviewer, those quality reviewer will also need to review this and sign them off to say that yes, these are being reviewed and these are done. And this has to be part of the audit planning documentation and the audit file which is there. So with this, I think we complete the audit strategy. Now we move to the next section, which is your audit plan. So if just to summarize, we had an overall audit strategy which was there, which is a much higher level. Under the overall audit strategy, you will have a subset which will be your audit plan. Audit strategy is a very high level document, whereas an audit plan is a more granular level data which will give how an execution is done. So now we are moving to the audit plan from the audit strategy. So the what are the contents of the audit plan? So the auditor shall develop an audit plan that shall give the description of at least these three things. The first one is the nature, timing, and extent of the risks which are identified, which are covered under SA 315. And then the second one is what are the further planned procedures which the auditor has identified against the various account balances as determined under SA 330. And then the third one is any other planned procedures which are required to be carried out by the auditor to comply with the standards on auditing. So primarily you will do a risk assessment, then you will do a nature, timing, and extent of audit procedure required to cover those risks. and then any other procedures which are required to be done. So these are the overall 3 things which we should get covered as part of the audit plan. Now we'll go through this each of them in detail. So again, like I mentioned in the beginning, I would call this SA 300 like the mother standard, right? Because it will draw reference to all the other auditing standard and say you do this based on the guidelines given in the respective other standards on auditing. So here that way you will see that while it is asking the members to sort of document or have a plan where they will do a risk assessment procedure, the risk assessment will be done in accordance with the guidelines given under other standard like SA 315 in this case. So primarily, how I will just summarize what needs to be done. While a detailed guidelines are available in the 315 or other standard. So primarily, risk assessment procedure involves either an inquiry or carrying out some analytical procedures or observation or inspection. So this inquiry can be with the management and those charged with the governance, or with the team who's involved in the financial statement reporting, or it can even be their internal auditors or any other personnel of the client. If you're looking at some legal cases, then it can also be inquiry with the in-house legal counsel. So it can be anyone, any personal, anything which auditor based on his judgment believes is required for him to carry out certain procedures. Those are the inquiries. So primarily an auditor will need to sort of carry out various inquiries. Then the next one is based on this inquiry, you will sort of be able to develop do a risk assessment. The next source would be your analytical procedures. Now what you will do, what are the analytical procedures? So based on the preliminary numbers which are given, which could be either financial or non-financial data which is received, the auditor will carry out various trends, ratios, and variance analysis, and then based on that you will sort of identify some key points or key risks which would come out, and you will do a risk assessment based on the outcome of those analytical procedures. The next one is the observation and the inspection. So the as part of the risk assessment, the auditor may call for some documents like he may want to visit some location, he may look for some MIS report or a draft financial statements, and then he may visit some of the facilities, understand. So he may do some observation inspection, and based on that, this understanding and these data will sort of enable an auditor to do a risk assessment procedures. Now, in addition to risk assessment, you will have to get an understanding of various other key things like the relevant industry in which the company is working, which will also enable you to see if there is any specific industry risks which will come up, and also the legal and regulatory framework under which the company is operating. So that may also help auditor in assessing the risk which could exist. Then the nature of entity, including its operation, ownership, and governance structure. So financial mode. So based on all this, also based on understanding of all this, the auditor will need to do a risk assessment. Then the internal control environment, and how conducive the design of the internal control and the overall framework which is there. So this is again very important, because you will have to see what control environment exists, and whether the design of those controls have been properly done, and whether based on your past experience and review, whether the management is able to sort of properly do those control activities, and those are monitoring those controls. So if the control environment is not appropriate, then you may have a heightened risk in various areas. Similarly, if the control environment is good and you are able to rely on those controls, then the risk level of risk may sort of come down. So that is how it can impact your overall risk assessment. And then the other factors I think which you will have to also look at is whether there are any risks which are more pervasively applicable to the whole financial statements, and what are the risks which may potentially affect at an assertion level. So let us say a company has a going concern issue, then it is something which is pervasive and applies across all the financial statements. So that will be a more pervasive risk which can come. Similarly, if there is something at an account balance level, then the risk may apply only to that specific account balance level. And then the auditor will also need to identify the risk, which is primarily what can go wrong at the lowest level possible, which is the assertions level at each of the account balances. And then once he's assessed the risks at an assertion level, he needs to consider the likelihood of misstatement or potential misstatement and in each of these account balance, and then plan for the procedures which has to be done. So primarily this is a very high level risk assessment process which has to be done. This will be a very granular approach for each account balances, which will come as part of your audit planning document. Now going to the nature, timing, and extent of audit procedures. So I think here it is very important when an auditor is determining the nature, timing, and extent of the audit procedures, that they document the responses to the risks appropriately, because the auditor will need to either carry out one of these kind of tests, right, like inspection, observation, inquiry, confirmation, recalculation, etc. Right? These are the kind of tests which an auditor will need to plan to sort of respond to the risks which is identified. And based on the kind of procedures which he has planned, then he will sort of determine the extent and timing of the procedure. So let us say you are looking at it also depends on the account balances. So if let us say you want to sort of check the existence of inventory, so the kind of procedure you will plan out is to do an observation of physical stock of inventory to test the existence near the reporting period or on the reporting period. So that is how you will have to plan the procedures for the risks which are identified. So essentially the nature of test, while fundamentally you may plan to do an inspection, observation, or any one of those kind of a test, the test can broadly fall under two category. In fact, substantive can be two category as well. So I would say three categories. So you either it is a test of control where you will plan for doing the control testing, or you would plan to do a substantive procedures, which will also include a substantive analytical procedure. So one is your control testing, next is your substantive procedures, and the third one would be your substantive analytical procedures. So one of these three or combination of these three or all of these three is something which in the professional judgment, considering the account balance and the considering the nature of the risk of the balances, the auditor in his professional judgment will decide what is the nature of testing which he wants to sort of conduct. The other important thing here is this needs to be, like I mentioned in the earlier slide, at the assertion level, because the risk will be identified at the assertion level, and accordingly you will plan your responses to those risks also at a assertion level, so that those are appropriately mitigated. Then again here, very important to also see is the nature of test will also be determined based on the level of risk which you have identified. So let us say you have for some account balances identified a high level of risk, then what procedure you will perform will change compared to a medium or a low kind of a risk which you have identified for some account balance. So you will not carry out the same procedures for all level of risks. For a high level of risk, you will have to carry out a higher level of testing, and this bifurcation, I think demarcating this bifurcation and documenting this as part of your audit plan is very, very important, wherein you will demonstrate that because I identified a higher risk for some account balances, I carried out these incremental procedures, whereas for a normal or a low risk, I would have not carried out this incremental procedure. That is very, very important. That is how you will be able to demonstrate that you, because the risk was higher, you carried out incremental procedures, and that enabled the members to sort of mitigate those risks which were noted. Now going to the next one, which is the timing. So timing again depends on the purpose of the procedures. If let us say if you are testing something very specific to year-end financial closing process, then you will have to make sure you check in the year-end. Like I gave you an example of inventory count. So if you want to check the existence of inventory at the year end, then you will have to make sure a physical count observation is carried out at the year end, so that the timing is covered at that point of time. Similarly, you may sort of decide to do an interim audit, or you may be doing some limited reviews depending on the various requirement. The coverage may be varying. So if you are doing an interim audit, you may not cover the full period of the audit in your interim period. So you will cover only the interim period. And then subsequently, when you are doing the year-end procedure, you will do the procedures for the remaining period, the remaining period to cover your total audit period. So let us say if you have a full year for reporting, which is 12 months, so maybe first 10 months you will cover as part of your interim procedures and interim audit on interim date, and plan all your nature extent of testing for the interim work. And then subsequently for the balance 2 months, you will cover again in a separate manner. So your audit plan document should clearly sort of indicate and bring out how you will cover your whole reporting period. So in this case, we had the reporting period of 12 months. So you will have to say how you have planned to cover the period in the interim and how the balance period is being covered, and what procedure in each of these are being done. So the what procedure you need to do also depends on the risks and professional judgment. Some cases only a roll forward procedure may be appropriate, but in some cases you may need to do more than a roll forward procedures. So it all depends on the risk, nature of risk, and nature of account balances, and the control environment and other factors, and also the professional judgment of the auditor. So once you have decided on the coverage, what extent you will do is again dependent on the risks you have assessed, right? If you generally have a higher risk identified to account balances, it always makes sense that you sort of do the procedures nearer to the year end of your reporting, rather than doing at the beginning of the audit period. So let us say if you have a higher risk identified in certain area, then it is always better that those procedures are carried out towards the end of your reporting period. And also the extent of work you will do for a higher risk area would probably be significantly higher than a normal or a low risk areas which you have identified for an account balance. And the other key factor which has to be considered is the fraud risk factor which are involved. So let us say if as part of the fraud risk assessment which is carried out by the auditor, they identify certain areas where fraud risk is applicable, then they will need to sort of identify plan on testing those mitigating plans for those fraud risks, and what responses come out. So again, the timing would depend on both the risk which is there and also the fraud risk which are coming as part of your risk assessment. Then going to the extent, to what extent and what you will do. See, this will again depend on the materiality and the degree of assurance which you are looking at. So considering the nature of testing, timing, you apply the materiality and what degree of assurance you're doing, you will sort of be able to identify the extent of testing which has to be done. And there is a separate auditing standard which clearly calls out how you will arrive at the extent of testing. So again here, the extent will vary. So let us say if you have concluded that the tests are operating, controls are operating effectively, and the auditor can rely on those controls, then obviously the extent of substantive procedure you will do will come down. Whereas if you conclude that you cannot rely on the control testing, then the amount of substantive procedure which you will do will sort of increase similarly. So it's a combination of risk and how you are getting a comfort on the nature of controls which are there and the substantive procedures which you are doing. So it's a combination of multiple things. Okay, now, like I mentioned in the beginning, if you see, there is a huge interplay with, as part of the audit planning, there is a huge interplay between what other standards are saying and what is required as part of your audit planning. So you will consider various other standards on auditing, and these are some of the standards which I have listed here, which the auditor will factor when he is doing the risk assessment. When an auditor develops a audit plan, he will factor the requirements under each of these standards, and then document how that will impact each of his account balances and what effect it has on the overall audit plan. So I think it covers everything from planning, pre-planning of an audit to except reporting. I think it is covering all the overall execution piece of the whole audit. Everything is covered. So each of these standards, I've just listed it down to say how it interplays with all the standards. Almost all the executions standards on auditings are covered. So whenever you are, let us say, looking at confirmations, if you say I will obtain confirmation, then you have to make sure those 505 SS 505 requirements are taken care, and those are sort of interplayed in your audit planning. Okay, so this is a illustrative content of an audit plan memo, which you will sort of prepare for each of once you have done a risk assessment and planning. Unlike an audit strategy, the audit plan will be at an account balance or disclosure or class of transaction level. So you will see this to be done at each material class of transaction and account balances. So at each level, you will have to sort of document these, and this is how the process will flow. So essentially, as part of your audit planning memorandum or audit planning memo, you will have for each key or each material account balance and class of transaction and disclosure, these being documented. So the first one would be the area and the account balances which are there. Then you will sort of bring out the understanding of the process, like what process the client follows for those area and those account balances. And then based on what are the account balances which are there and the understanding, you will also see what were the results of your preliminary analytical procedures, whether there was any abnormality or whether any exceptions were noted as part of your preliminary analytical procedures, which will sort of need to be factored, that will come in as part of your audit planning document. Then you will document the results of your test of design effectiveness of the control. So you will have to test the control environment and see whether those controls are working effectively or not. So you will see whether the design of those internal control relating to the specific account balances and area. So believe, remind you, these are at a assertion level or account key. It's at the lowest level and not at a very high level, right? You cannot say I do this for, let us say, inventory. No, it has to go at a assertion level at each of these account balances. So you will say for each of these assertion in inventory, this is the result of design and this is the result of the inspection of whatever procedures, right? Audit procedures, nature of audit procedures which we have done. Based on your understanding of the process, results of the preliminary analytical procedures, and the controls which have been put in place, you will identify the risks, right? You will say what is the risk which has come out, and why is that there specific to that account balance. And then you will also see, because of this risk, whether any of the other areas are getting impacted, because a lot of areas could be interlinked and it could be interplayed, right? So you will also need to factor if any other sort of areas are being impacted because of this risk being identified. Then any other information relating to this account balances, if you want to bring in, you will bring in here. And then based on your understanding of the process, the designs, and the risk identified, you will plan your procedures against these specific account balance. So what procedures you will do is something we sort of had discussed in the previous slide, the nature, timing, and extent. So that is what will come in your planned procedures. So now again, in the risk identified, so you may have risk could be a key risk, which will be like a, which is high risk, and then you will have a non-key risks. And here the other key important point which you need to also factor is whether there are IT systems involved and whether it is a manual control, automated control. So whether there is a system driven control, and what are the information which auditor will need to use, like what are the reports which come out of the system which the auditor will need to check. So all these needs to be factored when you are arriving at your planned procedure. So while it looks like it is specific to one area, but it may also cover other areas depending on the kind of account balances we have, and the kind of information system which they are used and applications which are being used. So in your planned procedure, if we have some IT applications which are being covered, you have to make sure those are also factored and those are also tested as part of the procedures which you have planned out. So this is an illustrative content of maybe one area, whatever it is. So this kind of a plan needs to be developed and documented for all the material class, all material class of transaction account balances and disclosure. So you will have a big document which will say this as the heading and then all the areas, and then say what you are doing for each of those areas and what is the planned procedures. And so this is how you develop an overall audit plan which will highlight for each of the areas, each of the material class of transaction, account balances, and disclosure, our understanding, and then our conclusion on the design part of it, and then the risk which you have identified and planned procedures for those risks. So this is how an audit plan would look like, and this has to be part of your planning document and has to be part of your audit file for all the areas. Okay, now so going moving further, so we spoke about audit strategy and then we spoke about the audit plan. Now, one of the key requirements of the standard also is to do an discussion among the engagement team as part of the planning, which is called as engagement team discussion. And then then sort of share the experiences amongst the members of the engagement team. So the engagement team here does not mean that engagement partner is alone an engagement team, or anybody, only the core team are the ones who are part of engagement team. If you see, engagement team will include even specialists, like the technology specialist or tax specialist, or it can also be a case where you may need to involve a forensic specialist depending on various circumstances. So specialists are also part of the team members, and they need to be part of the planning meeting which is done. So the planning meeting is not that it has to be done only with the audit team, with the partner manager. No, you will also need to call the quality reviewer. You will also have the specialist. So it's basically everyone who will sort of be involved in this engagement in any form or the other will be part of the team. So the overall benefit of doing an engagement team discussion, or the idea of doing an engagement team discussion, is to sort of allow each team member, right? Because each of these team member will bring in their own knowledge and their own experience. So this is a forum where each of them will sort of contribute their insights or their understanding of the team or the industry or the relevant balances, or let us say tax means they will bring their perspective from tax point of view, what is the risks or what is the procedure needs to be done. That is one. And then second one is you will, by doing this meeting, you will gain a better understanding of the risk assessment. So because you have multiple people bringing in multiple perspectives with various experience, you will have a better understanding of the potential risk. And this is also a forum where knowledge is shared, right? So some part of this team may be a continuing team member who may know much more about the client, their operations, their nature of business, their control environment, etc., etc. So they may sort of share that knowledge in this forum and help others sort of bring up to the speed on how the overall things happen. That is one. And plus this is also one of the another thing which is required as part of the engagement team discussion, is to have a discussion around the fraud risk. So assessing a fraud risk as part of your risk assessment is mandatory, and as part of engagement team discussion, the engagement team will also discuss on circumstances or types which can lead to possibly a fraud in the as part of the engagement. So engagement team, based on their understanding, will discuss what could be the consideration or circumstances which may possibly indicate a fraud, and based on this you will, as part of your risk assessment, identify what are the risks which are fraud risk. So it is very, very essential that an engagement team discussion is done at a planning stage, and all the key members or engagement team members are involved as part of this discussion. And then going to the piece of documenting, again here I think one of the ways in which we document the engagement team members discussion is to have a minutes and the agenda. One is before having a meeting, document the various agenda points which needs to be discussed. And then once the meeting is done, you will have a minutes which is being done and circulated, and those minutes of the meeting can be part of your planning section of your file, and you will that way be able to evidence or substantiate that the engagement team discussion was done, and this was the outcome of the discussion, and these are the action point coming out of those discussions. And this is how these action points have been addressed. So that is how you will make a minutes with the overall conclusion. So this is all about the involvement of all the team members. So another key point here which we need to understand is planning is not just a discrete phase of an audit. It's not that it is done only once and then once I have done it, I just keep it in the file and then I'll only start doing execution. No, I think that is a wrong perception. Planning is a more continual and an iterative process. It actually starts when you complete the previous audit and goes on till your current engagement is sort of signed off. And it's not like it's a cast on the wall that once I have identified these risks and I have identified this procedure, that is all I need to do, that is the only thing you have to do. It is not. Planning is an iterative process, because as you do the audit, there may be certain new things which you may sort of discover, or new information which you may sort of become aware of. And there can also be circumstances where your understanding can change subsequently from what was your initial understanding of certain things, which may which may necessitate you to sort of relook at the risks or relook at the procedures you have planned. So planning is a very iterative process. It keeps on happening throughout the audit. It's not that once you have done and once it is been completed, you just sort of don't relook at it or don't revisit it. So what is the standard says is, once you do the planning, you also have an option of relooking at what was earlier planned, and then you again sort of update or change those based on various circumstances, and then document that as part of changes to the planning memo. So what the typically, if a change is done, let us say, to give you an example, you might have probably considered some information which the client had given initially on some control environment or control process, but subsequently when you go and start looking at those process and start doing those control testing, you will see that the actual process might be much different from what you had been given to understand. So now there is a change in the information or change in the understanding between what was initially done to what is actually there now. This will essentially necessitate a change in your risk assessment or change in your plan procedure. So now you will again go and document as part of your planning that these were the changes you made to the original planned audit plan or audit strategy, and these are the reasons and these are the changes. So there is an iterative process, and the document can be revised, and most of the cases it is revised, but you document why was it revised and what are the key changes which happened from then to now. So it is not that I do it and I keep it and I don't document it at all. So this is very, very important that you document the reasons for the change and update that change as changes to the original plan document para in your audit planning, to say these were the changes, right? We made these changes and this is what happened because of these reasons, these changes were done. This is perfectly fine and it has to be done. And this is a mandatory requirement as per the standard, that any changes done to the planning document is documented and reasons are mentioned, and it is part of the audit planning memorandum or audit strategy memorandum, depending on what you are changing. Then the auditor shall plan the nature, timing, and extent of direction and supervision of the engagement team members for the review of their work. So this is very important, that the extent of direction, supervision, or review which the auditor plans is sort of consider some of the key factors which will determine the nature, timing, and extent of direction, or to what extent the supervision will be there or direction will be there is determined by these four factors. So primarily, how much direction you will do to the team, or how much you will supervise, to what extent a review has to be done by the team, is all dependent on these factors. One is the size and the complexity of the entity. So a very large entity and a very complex entity will obviously require more experienced and a senior team, including partner, like a complex area where which will involve a lot of judgment, and where there are much larger in size, then obviously more senior people of the team members will be involved. Similarly, the other factor is the area of the audit. So let us say you have a higher risk area, then you will have a more experienced team member looking at those higher risk, and also they will be spending much more time in those key risk areas compared to non-key risk areas in sort of directing, supervising, and reviewing the engagement. Similarly, the capability and competency of the individual team members. I think it is very essential that at the beginning of the audit plan, when you sort of identify individual team members to perform the audit, you assess their capabilities and competencies, and then based on their past experiences, their capabilities, allocate various areas to them depending on what you believe they are capable of doing, and allocate a more riskier area to more senior members of the team members, more complex environment, complex areas to more senior people on the engagement. So this is how overall you will plan your team requirement. Now going to the documentation. I think the key, I think I have already sort of covered this, but this is all what we need to document as per SA 300. One is the overall strategy. So I discussed the audit strategy memorandum and the contents of the audit strategy memorandum. Similarly, audit plan. I discussed the flow of what all should be part of the audit plan memorandum. So you can have an audit strategy memo or a memorandum, or audit plan memorandum, or any document like that, and then document these as part of your planning documents. And the third one, like I mentioned, any significant changes made to any of these two, you will document with the reason what were the significant changes, and why were these changes done. And it is pretty normal that you make changes to your audit strategy, audit plan, because as you progress in an audit, you may be becoming privy to much more detailed information, and the circumstance can also change, right? Like as the time passes, there could be certain things, certain events happening which could lead you to sort of relook at your assessment, or relook at various things. So this is pretty normal that there are changes being made to your audit plan. It's not something in very exceptional case. It will happen, but it depends on the circumstance. So these are the two key documents as part of SA 300 you will need to keep. One is your audit strategy memo and audit plan memo, and the contents of each of these I have discussed earlier. With those contents, these needs to be there. And one of the key important point of this document is there has to be an evidence of a preparer and a reviewer. So the partner reviewing or the quality reviewer reviewing should evidence through a sign off that he has actually looked at this and reviewed it, and this guy has prepared it. So that is also important. That has to be done in both of these key documents, and whenever changes are happening, it needs to be redone that the changes are approved by such and such person, including the engagement partner and the quality reviewer wherever applicable. So documentation is essential, because something you miss and is not documented, then like they say, right, work not documented is not done. So it's very important that you retain these documents to evidence that these planning activities were carried out, and these were part of your overall audit plan. Okay, so in addition to this, we have some additional considerations which are required in case you are doing initial audit engagements. So in addition to the other things which were covered as audit strategy and audit plan, if it is a initial engagement, a first year engagement, you will need to sort of do these incremental procedures. One is you have a separate standard covering this on what are the requirements to be done. That is, of course, you will have to do. The key point is testing of the opening balances. So you will need to build a strategy on how you will sort of plan to test the opening balances, because this is the first year in which you are auditing. You will need to sort of have a strategy and a plan of testing these balances. And even before that, as part of your pre-engagement activities, you will need to make sure the ethical requirements of ICAI on communicating with the preceding auditors, getting no objection, all those requirements are complied with, in addition to your other procedures on pre-engagement which has to be done. So in an initial engagement, you will have these incremental things which will come up, which you will have to do, and you will have this, and this will form part of your audit strategy and audit plan document, where you will say that this is an initial engagement, and then you will say these are the planned procedures which we want to do for the opening balances, or you will say that you have obtained these and no objections from the retiring auditors, and you have met those requirement of the you met those ethical requirements prescribed under ICAI. Oh, so briefly, we discussed the discussion with the management. SA 260 mandates that the auditor carries out a periodic discussion with the management and those charged with governance. So there is an overarching framework which is given, which says that you will need to communicate with those charged of governance. And one of the key documents which needs to be sort of discussed with TCWG is your audit strategy and the audit plan. So to what extent you will decide and what extent you will discuss and what will be done is sort of left to the judgment of the auditor. It's not that you will go and say you give him your full audit plan document, because the moment you say this is your whole plan, then the surprise element in your whole test sort of goes off. So you will need to sort of have a fine balance of what information you will give and what information you will sort of not necessary to be given. I think some of the key points which you need to give is one, as part of your meeting with the TCWG, is your overall audit timelines first, which will sort of align to what is their expectation and their dates and their meetings. Then another key point which you will need to see is which you need to discuss is what is your approach to the overall audit, whether you are sort of doing control reliance approach, and how you are sort of addressing the key risk, and what are your key risks which you have identified, and what procedures you plan to do, and what are the fraud risks kind of thing which you identified, and what mitigating plans or procedures you sort of cover as part of that, and the overall conclusion dates and things like that. So this has to be at a very high level. And then again, of course, see, while this is a discussion which you will do to cover the planning, you will also do another discussion once you have completed the audit. So you will obviously have an opportunity where you will say that these were the findings and these were the deficiencies, if any, in the overall controls or whatever, and whatever is the issues which you have, you will obviously. So basically, it will be sort of a two-staged discussion, mostly in large corporations, but in a normal, medium, and a small entity, this is more, I believe, an ongoing discussion which will happen, because most of the private companies management and TCWG would be the same people. So you would anyway meet with the management, you will tell them, you will update them what was done. So again, here the key point here is, while most of us meet, discuss and do it, it's sort of not documented because these are mostly meetings which can happen. It is important that minutes of these meetings are prepared with the agenda, etc., to evidence that this meeting was done on these dates, and these were the people who met, and these were the points which were discussed, and you keep those minutes along with the action plan as part of your file audit documentation, which will evidence that these meetings were done, and these were the dates, and these are the action plans, and whatever outcome came out of it. So that way you will have a document also done for whatever meeting which happened. Okay, I think that's all I had. Any questions or anything we can sort of take up now?
I think some 3 questions in Q&A. Can I read out, sir? Hello?
Oh, sorry, I can see it. I will read it. I'm also able to see it.
Okay.
First one, sir, in the current existing scenario where the multiple due dates are linked every month, how do you see that challenge to be considered when audit plan going for a toss with website issue, filing issues, etc., recurring guidance, etc.? Okay, I think this is a very, very practical question which I think everybody has asked. I think it again goes back to reiterate the fact that how important planning is. So, I mean, while we understand that you will have all the due dates coming up more frequently because of various regulatory requirements, it becomes all the more important for us that we plan for what work we need to do. So you plan in advance, and you plan much more in advance to make sure that whatever is required, right, as per the standards, are being followed. I think one of the key thing which I have over the period of time done, and which has helped, is one is managing your overall requirement, right? See, you know what you're going to do in a year, and when you will have each of the client deliverables coming up. So plan at the beginning of the year to say these are the timelines. Have those discussion with those clients upfront to understand their expectations, and then plan your resources accordingly. This has actually worked for me, wherein planning upfront, having those discussion with the client, being more proactive, has sort of helped, wherein you can predict what can happen rather than being in a situation where a lot of uncertainties are there. Okay, the next question. It says nature, timing, and extent. I'm not sure what they're asking. Okay, I think it's here. In this, how can we document the timing? What is the meaning of timing here? Okay, so I think this part I covered, but I will again sort of reiterate. Timing here means what at what point of time you plan to do your procedures. So like I mentioned, if it is a testing of existence of inventory, you will need to time it to see that you will do those observation of verification at the year end. Let us say you're doing a 31st March audit, so closer to or near the year end you will have to do. So that is the timing. Similarly, if it is a large audit, or you want to sort of do an interim work, so you will time to say that this is the time I will do the interim audit. So one is which period you will cover, and then what time when you are sort of planning your interim work, and then your substantive the balance period, your final audit. That is also timing. The third one is timing your visit to various location. Let us say they have multiple location, multiple factories, or multiple components. Then you will time to say these are the period during which I will go them, and these are the audit procedures I will do. So that is basically the timing part of the overall nature, timing, and extent of audit. Okay, that's all I had.
Yes. I think no more questions.
Maybe if any more questions, we can just take it. We'll wait for me.
Members, if you have any questions, please post it on Q&A. If no questions, we are going to conclude now. I hope there is no question, sir. We
No.
can conclude.
Yeah. They can anyway reach out subsequently. If they have questions, they can post it and you can let me know. I can try to answer them.
Sure, sir. Sure, sir. I really thank on behalf of Bangalore branch of ICA for your time and efforts, sharing your valuable knowledge. Really, it's a very interesting and relevant topic for all the chartered accountant. As we discussed, we will continue this series of standards and auditing sessions. I'll keep in touch with you. I thank on behalf of Bangalore branch of ICA for your time and efforts for sharing your knowledge. Thank you, sir.
Thank you. Thank you. I would like to thank the branch and you, chairman, and all the committee members for giving me this opportunity. It was really wonderful actually presenting to the members, and I hope whatever knowledge I shared will be of some help and they will be able to implement most of the things which were suggested. Thanks a lot. Thanks again.
Thank you, sir. I seek your continued support. You keep doing programs even next year also. It will be great help for our members. I also thank all the members for actively participating in this program and making it a grand success. Thank you, our treasurer also. Thank you. Thank you once again.
Thank you, sir.